would change. There would be more upward tendency for pulse production going forward. I thought we'd just spend some time on specific crops. Field pea outlook for 2012. Canadian acreage will be up because movement this past season has been amazing. By the end of December, over half of the peas that were available in Canada were shipped. Prices to the farmers were very, very good. There's reasonable optimism about what will move in the rest of the season. However, it doesn't sound like India is going to be a strong buyer until new crop peas are available out of Canada. But I think there's a lot of optimism that China will continue to buy, and other parts of the world there will be fill-in demand. We're in a situation where, when I show you this, well, we'll talk about it when we get to the supply demands. U.S. acreage will rise. Farmers in the United States could not plant all the peas and lentils they wanted to last year. That land is going to come back, and some of that land will come back into production, hence the acreage will be up. France is going to decrease peas, more than likely. Apparently, the subsidy that was available to the growers in France for pulses that were diverted into livestock feed use are going to be gone, and that will discourage, or should discourage, farmers from growing peas this year. The percentage of decrease is thought to be maybe 10 to 15%, but that's fairly significant. I think with the increase in Canada, Canada is the most important exporter in the world. The increase may be substantial enough that pea prices on average will be lower next season than they have been this season. When you look at it, peas, in terms of the whole pulse sector, I was a pea trader for a lot of years, so I tend to like this commodity. And you can see that I'm optimistic about the acreage, the production coming back towards 2016. Even though we'll go up this year, that should reduce acreage next year and result in a reduction in production for a couple of years. And then the lower prices that we see then will bring production back into the crop. And that's what you see happening here, with Canada probably having the most movement in terms of acreage. For production, in the last 5 years, the world production of peas has been just under 10 million metric tons. Last year, it was about almost 8.5 million, which is a significant decline. And then for the coming year, it could rebound to about 9.5 million. The biggest change in here on the upside is going to be in Canada. Some other countries are looking to expand. The United States could expand a little bit next year. French production could be up, though acreage could be down, and that's just a function of going back to average yields. And these numbers are obviously very speculative because we have to wait until the crop is being grown and how the growing conditions are in order to know what we'll be looking at in terms of yields. Since Canada is probably the most important pea exporter, I thought we'll look at the Canadian pea supply-demand, which kind of preempts what Gordon Bacon might have been speaking about when he talks about Canada later. Production is unlikely to get back up to the previous 5-year average. There were a couple of years in there where Canada grew well over 3 million tons of peas each year, and we probably won't get back there. Acreage will be up quite sharply, and with a return to average yields, that'll bring production up. The concern, though, in Canada is that it is really dry, and this winter, we're in our winter period right now, and it's been warmer than usual, but the warmth hasn't been accompanied by very much snowfall. And as a result, the land is barren out there. When you fly over, you see a lot of open fields. You almost get the feeling you're going to see a piece of farm machinery out there working the fields, although it's a bit cold for that. The problem with this is that we will get periods of time where the temperatures drop back to what would be more normal for us, which is -10, -20, -30 with extreme wind chill, maybe worse. I've experienced worse on the prairies. When that happens, what it does, if there's no snow on the ground, it dries out the top several inches of the soil. And that becomes a real challenge when it comes to seeding time, because the soil will be dry. It'll become critical to have moisture at that time. If there's no snow cover, then there has to be a very timely rainfall. Otherwise, the farmers are planting into very dry soil. They'll plant quite deep if that's the case. Peas they like because they will go deep, and they'll try to plant them into moisture, but they'll still need good rainfall after seeding is complete in order to get proper germination and a good crop going. And then we're going to need, if we're going to be dry, we need timely rains. I know a friend of mine was being trained at Northern Sales several years ago, and he wondered about this. He said it was very dry in the prairies that year, and he was very concerned about the status of the crop. C.O. Schwartz, who owned the company, said that he wasn't to worry about that because Canada only needs 2 rainfalls a year to have a crop. They just have to be at the right moment, and they almost always come. It's not quite true, but we're always eternally optimistic. If baseball is like cricket, then you know what I'm talking about because you always believe next year is the year that your team is going to take it and going to win. You can see that the ending stock projections for peas, though, are incredibly low. There's a potential for it to go down to 200,000 tons by July 31 of this year. It may be higher if the demand from India, if India doesn't buy anything, then it will probably be higher than that. But I wouldn't get overly excited about that because anything under about 350,000 tons is considered sold out. To be at 200,000 tons is like absolutely sold out. We're into bin sweeping territory when we're at such a low carryout. And it may be for that reason that number might be a bit low. I one time looked at it, I felt that on-farm stocks probably need to be around 125 to 150,000 tons to be zero, and that the trade in the last few years has been closer to 200,000 tons to be zero. So that tells you that anything between 325 and 350,000 tons is clearly sold out. If we get to these levels this year and next year, we're really sold out. So the price evolution next year would be one where you would start low because of the bigger harvest and probably work yourself up through the year. And I did try to do price forecasts, and I hate doing price forecasts because I'm always wrong. But I thought I'd go with a wide enough range, and there's a chance that at some point in there it'll be within my range. So I thought $275 to $350 a ton on an FOB Track Vancouver basis. You all probably have a better idea what the freight would be over here than I do. And I would see those as good working numbers. I based that on what I felt the farmers ought to be looking at for their budgets if they were going to grow peas this year and what they would hope to have. And it worked out to these numbers. So I think that they're a reasonable representation of where the farmer's thinking is at and probably where the market needs to be. This just looks at the yellow price pea comparison for the last few years for Canada, France, and Australian dun peas. And you can see that in this past season, Canada has pushed way above the rest of the crowd. And that's just a reflection of the smaller crop that we had last year. Very, very strong movement in the first part of the season and just that tightening of supply that's happened. And when you get bids up there and you get really good movement, you discourage farmers from selling. What you'll have happening in Canada is a situation where you'll be phoning around trying to buy peas from farmers and they'll tell you they're all sold out. In fact, that may not be true. One year that happened to me. They told me not to call back ever again. I called back 2 months later and they said, I remember those peas we didn't have? Well, we got 20,000 bushels here that we want to sell you. So I realized that farmers don't tell the trade the truth. Maybe it's because all we want to do is, we're like life insurance salesmen, all we want to do is business. And they want to avoid us sometimes. The lentil outlook is a little bit different. We still have a problem with massive carryover from the 2010 crop in Canada. Basically, the world supply still feels very good, mainly because of the production in Canada, and that still weighs on the market. Acreage will drop. Price performance this year has been poor. It's been really bad for red lentils in Canada to the farmer, and green lentils have actually been good, but they're not doing as good as the other crops that the farmers can grow, and hence that production will be down. More importantly, the new crop bids on greens and red lentils in Canada are at levels that farmers consider ridiculously low. Greens not so much, but reds for sure. What we're doing in the market is saying to them, please do not grow these things next year or this year, and I expect that we will see a response. Again, U.S. acreage will rise because farmers who couldn't grow them last year will bring it back into production. And as I said, prices should be lower on average. I think prices actually will happen is prices will be lower on average for green peas, but for green lentils, But for red lentils, they'll be higher on average because red lentils will bear the brunt of the acreage decrease. World lentil production forecast down this year. I think that there will be a production response that will bring it up in the next few years. And so we're looking at a situation where we should go into an upward rising trend in world production, and then prices will reach that point again where they tell farmers, please don't grow me so much, and we could end up with a bit of a price reduction. So I did think about these things, Pravin. If I look at the outlook for lentils, lentil production this past season and even for the coming season is actually going to be above the previous 5-year average, and that's why I think prices will just simply be lower. Canada is the most important producing area, and you can see a very substantial reduction there is going to happen. Whether the absolute tonnage, we have to wait and see, but I think you'd be thinking in terms of these magnitudes for what will occur. Turkey, the information I have is that they're looking for a bit of a reduction there as well. And Australia, I'm thinking could be more or less unchanged. I don't know. We need to find some Australians here to tell us what they think. And for the rest of the world, potentially up, but that may change as well. And that becomes more difficult to forecast. There I'm looking at countries like Russia and different places like that where we could see some increase. The Canadian supply-demand situation has been one of surplus. The previous 5-year average ending stock has been around 232,000 tons, or about 20% of usage carry over to usage to demand ratio, or demand usage ratio. Stocks to use ratio, sorry. This year we're looking at it being around a third, with the ending stocks being around 560,000 tons, which would be down a lot from what it was at the beginning of the season. But even though production is going down, we're still looking at fairly large ending stocks even a year from now. The big problem for the market has been the 2010 crop lentil. There's no joke about people trading stuff. And you could actually apply this to 2010 crop lentil as you have a cargo of lentils that's moving around the world. First it goes to Turkey. They don't want it. They resell it to Dubai. Dubai resells it to India, and they resell it to Bangladesh, and the buyer there accepts the cargo and he opens it and they distribute it to the people. And then they come back and they say, my God, I got lawsuits like crazy. Everyone broke their teeth eating this stuff. Well, this is an example of where you have a cargo that was for the trading, not for the eating. And that's how I think a lot of people feel about the 2010 crop. It was for the trading, not for the eating. And that has been a bit of a problem. The good news is that a lot of it is livestock are less picky than people, and a fair quantity of the 2000 crop lentils that were left over have been fed to livestock in Canada, and that has really helped change things. When I was in Saskatoon in January, the farmers said that they had been dumping stuff out into that market. They used that word dumping because they don't like the price, but they recognized that the market did not want that, and they needed to move it. There was a lot of 2010 crop lentils consciously traded in bulk conventional shipments to Turkey and perhaps other destinations. The buyers apparently wanted it, and I guess the feeling was that they could handpick through and that they would be able to split it and get enough usable yield out of it at the price that it proved to be more profitable than buying good quality from the 2011 crop. Whether or not it worked out for them, I don't know, but that is one useful way to get rid of a crop where you have markets where labor is inexpensive enough that they can handpick and select through the crop and through shipment like that and come up with what's usable and what's not. When I look at the prices, you can see my price forecast range is down for greens, a little bit firmer for reds than it has been this past season. The averages there that I'm using actually are interesting, which I did for yellow peas as well, and those are the season-to-date average trading level, rounded up a little bit for Canada. So it's actually a fairly accurate reflection of where the market has been so far this season. And I haven't juiced it at all, and that's the actual 5-year average. We track prices, and I calculated that over the last 5 years, and that's the average track value. Again, you look at the comparison, and here I just threw in U.S. Richley lentils. Otherwise, I stuck with the Canadian Laird, Eston, and Red. And you can see that as a group, they follow each other fairly well. The red lentils are the line at the bottom, and that has just fallen off the chart relative to the other types of lentils, and that's the reason that farmers won't grow it. That's being reflected back to them in very low bid levels, and they're not happy with that at all. Dry beans. Now I'm into stuff I can move more quickly. I think that the crop for the world dry bean market has reached record levels this past year, certainly for North American grown beans. There's a made in North America market because of production problems in Mexico, production problems in the United States, and problems in Canada. It has just created an intensely bullish situation. The whole region is short of beans. They're importing beans. Mexico has opened up duty-free import quotas for 100,000 tons of beans, which will go mainly to Argentina. They're talking about another 50,000 tons, and it sounds like they're talking about trying to resolve the phytosanitary issues with China so they can bring in beans directly from China instead of having them move through the U.S., sort of. Replace U.S. beans, which are going to Mexico, ostensibly. Argentina is going to grow more beans this year as well. Brazil has been having a lot of problems. Their various crops have suffered from weather problems, and their yields have been down and production has been down. That's resulted in a very strong import demand, and Argentina will respond to that on black beans. On white beans, they've had very good markets throughout the year around the world for white beans. Algeria bought a lot of the Argentina alubia bean crop this past year. Turkey continues to buy a little bit. There's a feeling that the traditional buyers in Italy and Spain have not covered their needs properly and they're short. So I think there's optimism about new crop prices there, and it's drawing land. It'll draw land into beans in Argentina as well. World prices for beans should be easier next season overall. The world market and the North American market are two